Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo Pascual, and Harry McDonough.
This podcast is sponsored by OpenExperts.com. OpenExperts is a place to go if you're looking to talk with top experts from around the world. That is open-experts.com. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup. From grants to investors to tips and tricks on how to be successful in your startup.
Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Chris Sayer. Chris, welcome.
Hi, how you doing, Ricardo?
Very good, thank you. It's a pleasure having you here. Chris, would you like to introduce yourself to the audience, please?
Sure. Basically, I'm Chris Sayer. I've been in a go-to-market role, leading sales and marketing roles for the last 25 years. I've had the pleasure of working in a very broad range of engagements across all sorts of different sectors, but primarily in the telecoms and IT sectors, working for businesses who essentially want to expand in EMEA and in the US. And that broad range of companies that I've worked for includes 3 startup companies, which I'm very proud to say that 2 of them have been very successful. And a whole host of large companies, including large multinationals like IBM, Vodafone, WPP Group. So I would summarize myself as someone who's spent an awful lot of time in sales and marketing, hopefully learning a lot as I've been going, and then applying, I guess you could say, the skills learned at the very large companies, and then trying to take that to startup companies after a bit of funding and taking them through a scale-up process towards some sort of exit.
Chris, I was just wondering, because obviously we connected before this, you're actually an accomplished founder, so you actually have an exit, which is something that's quite rare nowadays, to find someone who actually thinks for an exit. How did that story go?
Well, the full story of that actually is that there were, I'd like to say I was a full founder. I was certainly someone who's brought in as an investor early on in a business called Dexy.io. And that was a very exciting time. Essentially, it was, as is very common, a sort of Scandinavian company with an absolutely fantastic idea. At the time, that was for web scraping services, which was, very much a new technology when you go back 6-7 years ago in terms of its pervasiveness amongst usage in corporate and enterprise companies for the extraction of data from websites and putting that into a structured format which they could use to help them do their competitive intelligence and then obviously get one step ahead of their competition. But the case study there, if you like, was that I'd worked previously with the CEO, Jacob Lervigan, in Denmark many years before. I was in my consultancy role in the UK, looking after several clients, and he basically called me up and said, "We'd like to come and take this technology to the UK as a next logical step from Scandinavia, which is not that uncommon." At first, I was kind of resistant to it, just mainly because I didn't really understand what web scraping was at the time. But once I got the concept of that, I could see its potential. And I was brought in to really assist with a launch in the UK marketplace. And we set up an office in London. And we set about essentially growing that business and expanding that business, not only actually into the UK, but also into other countries, and obviously primarily into the US. So it started off in terms of priorities was to get some customers on board in the UK. And one of the things that we visited from the learnings in Denmark was that the audience that they were going after in the initial stages were developers, and they were charging a low subscription rate for access to the Dexy platform, which would basically enable developers and other power users to scrape data from publicly available websites for themselves. What the key pivotal moment was with Jacob was to switch that emphasis into an enterprise solution, whereby we basically took a price point from a few $100s a month to actually around $40,000 paid annually in advance for an enterprise license. That was kind of stage one. At this point, the enterprises are now adopting this technology to extract data. They were very previously using a lot of desk research and subscription to different types of data, but this would give them a chance to get real-time data in their hands. So it was a very exciting time. I think as part of that transition, my involvement in that was also to think about, well, what's the key thing we've got to do here? First of all, we were very lucky in the sense that we had the best technology in the marketplace at the time. And that was certainly very, very helpful. But from the enterprise perspective, I guess what one of the core reasons for our success was that we understood that the enterprises would want the appropriate support for those services. So, once you're dealing with enterprises, you're going to need to have implementation people, you're going to need to have customer success people, you'll need to have teams of stakeholders on phones to the enterprise on a regular basis, understanding their requirement, dealing with any changes that they need, and also explaining any data issues or just basically giving them some insights into the data. So we established ourselves very quickly as being the enterprise supplier of choice, if you like, with a leading edge technology. And this led to a very rapid expansion of our success. So, I think we'd started with a few $100,000 turnover pretty much, when I got involved in the business. And we grew that to significant millions over a period of about 4 or 5 years. And during that course, we also then expanded with the acquisition of a US company. So that was another exciting stage, because if you're going to enter a new marketplace, clearly you can go the route of the organic approach, or obviously you can also look at making an acquisition of another company. And during that time, we had an opportunity to work with a company called Mazenda, which was another leading data scraping provider at the time, based out of the US in Utah. And we then joined together with them. Essentially, it was a takeover by Dexy. And that then gave us an immediate presence in the US with quite a good team of people. And then we expanded those sales, considerably over the next couple of years, and then got the interest of a company called Engage3, who then purchased Dexy in 2022 for around $30 million. So that was the journey. And I would say the combination of that success was, first of all, as I hinted, we had the fortunate position of having a technology that was new and exciting and very powerful for retailers and brands, and that's having real-time data for them to basically win against their competition from an intelligence point of view. I think we had the timing, which was this rapid adoption that was going on for this data, so it was a real hotcake at the time. The other one was moving into the enterprise space, and obviously having a very powerful technology. So the combination of those things together and the team that we had meant we had some really rapid success. And I think I think even our sales team grew to around 20 people during that time. And we'd started off with just myself and the CEO doing the selling back in London in 2018, 2017. So that was the journey. Lots to talk about there, but hopefully that gives you a good insight into what happened.
No, I mean, now I'm super curious. I'm wondering, what were the key lessons you learned? Because that's a long journey from having a product that's not been that's the market's not aware that it exists, so you need to educate the market. That's a challenge. But then also growing it internationally and then acquiring other companies. What were the key lessons there?
Well, I mean, I think we had that choice. As I say, I mean, we had that moment where we had to decide whether or not we were going to grow organically. In actual fact, the lesson learned there was that we did actually try to go organically into some new marketplaces. And we realized actually that was extremely costly and was going to take too much time to be successful. So we realized as we started our expansion process that actually the best way was to acquire another company already present in the marketplace, because we just would not have been able to acquire a presence in that marketplace anywhere near as quickly. We wouldn't have had the credibility. We wouldn't have had the resources and the talents on the ground. So I think there was a very big learning curve there in terms of the approach to be taken, and we did initially try to just hire a couple of key people over in the US who'd worked in similar industries and grow it that way. But as I say, we were very fortunate to team up with Mazenda, and that was extremely successful. I think that would be one of the key lessons there. Yeah,
I'm wondering, how was the relationship with investors throughout this entire journey? Were they very open to giving more money to the company, or how did that work?
Well, it's like all things, isn't it? Once you become successful, a lot more people get interested. But actually, complete hats off to the CEO Jacob and also the other founder Henrik at the time. It was a bootstrapped situation. And there had been some initial, I think, minor funding from the Danish government in the very early stages of the business. Mm-hmm. But they were only very much sort of angel funders to get some incubation going for various businesses. And then actually we were in a very, very fortunate situation that our sales grew so rapidly that we were able to avoid the need for having any initial investment. Through our journey right up to the point in which we sold to Engage 3, in fact. So we other than leveraging bank loans and all the other usual sources of income or sources of revenue, sources of lending, we didn't need to go to any other third party investor.
You find there's a lot of companies in the UK that always want to go to the US market because it's a bigger market, it's the same language, it just makes good business sense. Was it very hard to go into the market in terms of all the legal logistics, or was actually, or as we can cut that off?
Sorry, beg your pardon. Classic.
It's actually the first time that actually happened on the podcast, so I might just leave it on because it's quite funny. So, as I was saying, was it hard to deal with all the legal and logistics of moving to the US, or quite on the contrary, it's very straightforward?
Well, I think that, as I say, I think that the answer to your question is that if you're going to go and do it yourself organically, obviously you have to go and learn the rules, and those rules are also vary depending on which part of the US you're going into, where you're going to base yourself, etc. So there is a big learning curve there. There is a cost there. You're going to have to get some local legal advice and financial contacts and all sorts of other things, and also understand a little bit about the culture there. And we circumvented that particular issue by going for acquisition, at which point you're then adopting, a very established situation with an existing customer who's already got all those things covered. So, I think my recommendation would be that, ideally you would team up with another organization, perhaps even think about maybe a channel to sell through if that's something that could work for the particular product or service that you're thinking of taking to the US. But definitely in terms of speed, I would be looking at that route rather than trying to do it yourself and going over there. It is possible, of course, but you will inevitably be hiring individuals that will know things, and that is a possible route. But much better if you can go to an established company, because obviously when we think about from a sales perspective, especially in the US, they want to be buying from US type companies with people with US accents and all the rest of it. So I think there are many advantages of just finding a company which you can merge with or that you can potentially take over.
I always like to ask this question, which is, what was the lowest moment in the company? The moment where you guys decided, you were considering quitting and you said, you know what, let's just push forward with this.
Well, I can tell you now, there was never a moment where we thought we were going to quit, but there were certainly some hairy moments. And most of those moments you can imagine for a small business is all around your cash flow. So I think, as with many companies, in fact, a couple of startups I've been, we've been a month away from wondering how we're going to make payroll. It's interesting because when you're in a growth stage with a few people at the beginning of the company, this is to be expected, and I think it's part of the course. Basically, if you're driving your own business, that things will get very tight on the money front. But I think once you start to get through 15, 20 employees, then obviously it becomes quite serious, because a lot of those people weren't with you right at the beginning, and making payroll, making ends meet is probably one of the most stressful moments that you can have, I think. So I think, I wouldn't say low points, but certainly, biggest challenges, because I think in our case, and I think I would say this to any entrepreneur, basically, you've got to believe in your product. You've got to believe in your service and what you're trying to do. And I think that most of the successful people will never give up on that. One obviously assumes that you've chosen a disruptive product or service to go to market with, and that you've done your homework in terms of your go to market and the opportunity assessment of how big this can be, what your strengths are, how you're beating the competition, how your price points are, etc. So assuming that those are in place, I think is a case of never give up, but there will be challenging points. You could say low points, maybe, but I think that would be more of somebody who's maybe got a product or service and they realize that they can't evolve quick enough, they can't expand quick enough, or they've just simply got something that's inferior to what's out there already.
Just wondering, when you were going through those moments, did you have something on the back of your mind going, I got this, or I can do this? Was there any sentence that you keep on repeating to yourself, any mantra, if you want to call it that way? Or not really? Or you just picked up on...
Sorry, picking up on?
No, like if you picked up on, I don't know, you're reading a book and the book gave you enough inspiration, or you called...
Yeah, I mean, I would just say, I think again, you draw on your experience there, really. I think in our case, with my particular background, you could say for the bit I was responsible for, you really have got the some comfort in terms of the experience that you've picked up. So, for example, you might revisit, if things aren't going particularly well, then you might revisit, have I understood that audience as well as I could have done? Have I asked my customers about, have I asked them the right questions, so that if we're not seeing the traction that we expected, that we fully understand why that might be? So the answer to your question is draw on the experience and go back to your go-to-market kind of work streams and the things you should be doing, and test it, and basically, speak to your customers, look at what the competition's doing, and try and understand what the macro environment is as well in the different markets you're going into, and basically come up with the reasons. What are the reasons? Analyze it. So I think if you've got that to fall back on, your experience and or knowledge through other people in your company, then that gives you a lot of strength. I think rather than feeling helpless, you're empowered because you understand where to look for the problem, if you see what I mean.
Having gone through that journey, when you now invest in other companies, what are the key things you look for? The elements you always say, if I'm going to invest, they need to have this, and that.
Number one, people. The number one is the people you're going to team up with, right? Have they got what it takes? Have they got the right personality? I think that's super important. So it's true what they say about, any investor is going to invest in the people first and foremost. And you really have to believe in the vision that the people that you're working with have got. They either share the same vision as you, or you have a leader in those people and you buy into that vision. In this case, I bought into our CEO at the time, Jacob's vision very much, very, very clear and focused on what he wanted to do. And I think when you've got that, it's very heartening, and you get swept up in that excitement. Number two would be absolutely the product and the service. Is it something that the market wants now? Have you got something that's going to disrupt it and does it much better? I mean, is that realistic? Is that realistic? The third would be the opportunity. So how big could this get? What is my assessment by different marketplaces? How quickly can I get the traction, and how big could this actually become? And then the last one for me, in particular, is that it's got to be scalable and repeatable as much as possible. So I think if I look at the businesses I've been involved in, then I'd always be looking for an ARR, annual recurring revenue scenario. I think there are all sorts of different models, but that's extremely attractive with the idea of winning a customer, and then they obviously stay your customer, and you build on that basis. So I'm sure there'll be other models coming along, but at the moment I particularly like this model because it's then gives you very clear work streams. You've got your team that's growing your customers, you've got your account managers and customer success people that are maintaining the customers that you've already won, and you protect your net retained revenue going forward, and that gives you great multiples if you're ever thinking about exiting the business. So if you want to get even in this market 6 to 9 times your revenue, you're going to need that type of business. So I think combination of those things is very attractive.
How do you think the market is doing right now? Because a lot of people complain saying, it's horrible, it's never been this bad. Others say, it's okay. And it's actually good that it is the way it is, because the last time we had this was back in the financial crisis. And that's where Uber came along and a bunch of other companies. So it's actually a good thing things are the way they are. So
I think my assessment would be it's pretty horrible, if I'm being honest, out there at the moment. I don't think people are, I don't think that the markets are flooded with cash. I think the investors are looking a little bit more carefully at the businesses that they're thinking of investing in. Definitely, they're much more, they have a much higher interest in these startup businesses getting close to break even or getting their costs under control. And that's something that has changed over the years. Before it was all about, let's get the revenue and just invest and build, and we'll invest in you. But I think now those investors are very much looking at your ability to obviously get going and then keep your costs under control and, get towards profitability, or be heading in that trajectory in a very strong way. So I think there's, it's a lot more nervous from an investor point of view at the moment. And, they want to reduce their risk, and that's put pressure on a lot of businesses because, those businesses that traditionally have been relying on a lot of investment up front are finding it a little bit harder to get going. Not to say it doesn't happen, but I would say that there's definitely a mood change amongst investors. I think it'll absolutely come back. Don't get me wrong, but at the moment that's the situation. I think the other thing is you're probably not going to get, maybe as bigger exits at the moment that you possibly would have done a few years ago with the conditions in the market at the moment. And so it might suit to plow on a bit further and build revenues and then sell at a later date. But it just depends on what business you're in.
I was just wondering, going back to your story. So you've managed to grow that company, exit the company, and then what have you done next? Because I know you're now running two other companies. So how did that progression went along?
Well, so what typically happens there is that once you get taken over, then in the case of my two partners, who are, by the way, much bigger shareholders, they exited the business to do something new and exciting. Obviously, I was involved in the sales and marketing side of it and was a CRO. So they kept me on during your earn-out period and beyond to look after things, because you've got those existing customers I just talked about. You have to make sure you keep the boat steady and that you're going to grow them and you're imparting knowledge into the business. So in my case, that went on for another year or so. And then, now I'm still an advisor to that business, but now I'm out there back on my consultancy gig again, looking for new opportunities to either invest in or to work with. My particular aim is which I really like, is basically imparting the stuff I've learned over the last 25 years and sharing some of those experiences with new and exciting startups, and helping them accelerate and grow and or get themselves in shape for some sort of exit. So I think it's great because I can apply all those experiences. It's also exciting because you're taking a step back from the leadership. You've been under that pressure for 5-6 years, and then there's an opportunity to start afresh and do some new and exciting things. So I will expect to, I am already obviously working with some other startup companies already, but I'm always on the lookout for investment and, picking out one or two favorites to go all the way.
But I mean, when you look at all these opportunities that are presented to you, what makes a difference? I mean, you mentioned leadership, product, opportunity, and scalable business. But what really makes you go ahead? What's the one thing you say, you know what, I had a feeling that this is going to work out? What's that one element?
I think I always get that feeling from the founder, from the entrepreneur, from the guy with the original idea. I think the passion levels that you see there and their vision is so attractive. When you meet those types of people, that you immediately want to invest and be part of that story. I think, for a lot of people maybe listening to this or have been through it themselves, or maybe they are one of those people. I think that, you can tell straight away the people that will just never give up. The vision is clear. It's, the logic is very sound. The expertise that they're putting around them is also of high quality. So, I think it's, pretty much a known thing, but, entrepreneurs should, and the really successful ones do, surround themselves with the best talent to succeed, and let those people perform for them rather than trying to do everything themselves. So I think that's a very important statement. So it's as I say, the enthusiasm, the very clear vision, and also the recognition of the talent pool that they need, and the understanding that they let those talents do their own thing, and those talents will then find and bring on board other proven and known talents into the business, and so you then get that whole ecosystem of highly talented people hiring more talented people and experienced people, and the organization becomes very successful. So it's, definitely starts with that first person, if you like, in the business, and it goes from there.
I was just wondering, you mentioned finding the right talent. Are there any tips or advice you can give? Because I've heard so many options when it comes to hiring people. Some say hire slow and fire fast. Others say, actually just go super quick at finding people. So what's your approach on this?
Well, I think it's a simple one. I mean, obviously, when you get to have as many grey hairs in your head as I do, a lot of people, and people's reputations, are known. So it would definitely be, first of all, use your own network, people you've worked with or you've seen and witnessed before. I think is a good one. And then the other one would be to go through trusted people that and ask them. And then, you can also, obviously, these days, a lot of tools to find very talented people. And if you're going to do that, then you're looking in you've got an opportunity with things like LinkedIn to look at that industry across an enormous number of people, and you can see from what people have been doing how successful they've been, and you can locate that talent. But I think the first and foremost would be probably somebody that you've worked with previously, or that is coming to you very highly recommended from somebody else. That's a safe bet. Yeah.
I always have this question, which is, as an investor, how do you like being approached? Because I'm sure you get a lot of cold emails saying, "Hey, would you want to give me some money to do something?" Or, I mean, how does it work? What's the best way for you?
I couldn't hear the first part of your question. I'm really sorry about that, Ricardo.
Sorry, I was just wondering, as an investor, how do you prefer being approached? What do you think works best?
How do I prefer for people to approach me?
Yes.
I think just a very, very simple overview of what you're trying to do. So, what is your product or your service? Why is it good? I think definitely presents something around the opportunity size, because any investor would obviously want to see, is this something that's going to be absolutely huge, or is this going to be, something that's going to be very small and short-lived? So I think you have to really highlight that. But, if you're going to put some stuff up in front of an investor, I think you've got to start your overview with a kind of a set of numbers of some sort to show them, what the potential of this opportunity is. And then you would also have a second, if you like, high-level slide, which would be your vision. What is your vision of this business? What does it look like in X amount of time? And what is your strategy for achieving that? And then I think on the execution side of it, I think that can come a little bit later. But for an initial interest, it would really be, hey, I've got this business. It's going to grow fantastic, repeatable revenues. We've got something that's, I guess you could say today, for example, a trendy word might be that it's AI enabled or something like that. So it's, it's relevant to what's happening in the marketplace right now. And it's solving a need. At the end of the day, it's very important that your product or your service satisfies the marketplace and ideally brings something new and exciting to it. So, yeah, I think that would be it.
The two businesses you're leading, Porto, Capital and HiBooks. Would you like to tell us a bit more about those?
Yeah, sure. So, HiBooks, I just mentioned AI actually, funnily enough. So HiBooks is an online accounting software. And you could say boring. You could go, another accounting software, and I'd understand that. So you've got Xero and you've got QuickBooks. You've got these other guys out there in the marketplace who are being hugely successful. I mean, you see Xero advertising everywhere on TV and everything else. So is there room for another one? And the answer is yes, there is, because in the case of HiBooks, what was attractive about being involved with that team is that they are leveraging AI and large language models to basically do some stuff that saves your average small business user and or accountant stroke bookkeeper about 5 hours a month of loading up things like receipts. So it's using really good technology to scan receipts, load them up, do the reconciliation with the bank. It looks at the receipt, it understands what that's for. So what was, very tedious. I certainly remember working for a lot of big companies and doing your receipts and your expenses is a very tedious process. This was going to solve that problem. That was point one. Point two was it's also extremely easy to use, and it's ideal for that very small business user who, let me tell you, even today, many businesses who are starting out are using Excel spreadsheets to manage all these things. And this, I think, is just a great tool that kills that from the off. And I see that as being very exciting. So the other thing is there's just an enormous number of new businesses that are forming every single year, and everybody needs these tools. It also has, potential for lots of other marketplaces. And because of the founder's background and connections, we've got opportunities in Saudi Arabia and Dubai and everywhere else. And these places are also changing their tax situation, and this solves all of those issues for them. So basically, huge potential, leveraging the brand new technology, solving some of the stuff that small businesses hate, which is complexity and having to have a lot of training and stuff. So it fits a gap in the marketplace very nicely. And then the other business, and then you mentioned Capetta, which is capetta.com. Please take a look at that. This is a company that is basically looking to change the way large businesses are doing their software development. And again, that is also leveraging AI and automation to basically to take care of a lot of the mundane code in software development. That's point one. Point two is it brings very, very good visibility for development teams that are dispersed across the world to see what they've been developing. They're able to basically leverage, if you like, blocks of code that have been written and basically leverage that and join that to other bits of code they're writing. But it's very visual. Very easy to plug and play with these different blocks, saves a whole bunch of time. And basically for businesses, that means they can spend time innovating rather than doing mundane code that, every single bit of functionality needs. So that one's a much more long-term thing, or at least medium-term. It will get traction and, but it will take time. So we're on that journey.
Chris, if people want to reach out to you, how can they do so?
If people want to reach out to me, probably the best way to do that is you can get me on LinkedIn, Chris Sayer. I think I come up quite high on the rankings on that. But if you look up Chris Sayer, and my consultancy is called Marv42, MARV42. If you're wondering where I got the name from, it's from the Hitchhiker's Guide to the Galaxy. The robot was called Marv, and the answer to the universe is 42. So anyway, if you look me up there, you'll see my background, and you can connect to me that way.
Chris, thank you so much for your time. I really appreciate it.
No problem at all. Great to speak to you today.
This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup, from grants to investors to tips and tricks on how to be successful in your startup. This podcast is sponsored by openexperts.com. Open Experts is a place to go if you're looking to talk with top experts from around the world. That is open-experts.com.